Good afternoon, everyone, and welcome. It's great to have you all with us today. We're just going to wait a minute or two just to make sure, let everyone join. Okay, great. I think we will start. Look, thank you for joining the Construction Professional Skillnet webinar on relevant contracts tax. We've had a fantastic response to this session, which really highlights just how important and often complex RCT continues to be across the construction sector. I'm Laura Dennison, Network Manager of the Construction Professional Skillnet. This session will be recorded, and please contact us after the webinar if you'd like us to send out the slides. It will be put up in the CIF YouTube channel. Over the next hour, we're going to cut through some of the complexity and focus on the practical side of RCT, looking at what you need to know, where the risks are, and how to stay compliant. We'll be covering everything from understanding who qualifies as a principal contractor to what counts as a relevant contract or construction operation, right through to revenue reporting requirements, penalties, and the VAT reverse charge. I'm delighted to be joined today by Kieran Doherty, who will be leading the session. Kieran brings a wealth of experience advising construction business and tax compliance, particularly in RCT and VAT. He works closely with companies across the sector to help them navigate their obligations and avoid common pitfalls. So we're in very safe hands. As always, we'd really encourage this to be interactive, so please do send your questions through the Q&A button and we'll make sure to pick them up as many as we can towards the end. So with that, let's get started. So Kieran, I'll just hand it over to you.
Perfect. Thank you very much, Laura. Good afternoon, everyone. Look, as Laura said, I've been looking at RCT for, I suppose, a long number of years at this stage from a training perspective. I joined IPAS back in over 20 years ago. And as I looking at RCT training, I suppose, for the guts of 20 years at this point. Today's session, it's going to be a quick whistle-stop tour through the operation of RCT. We're probably not going to have the time maybe to get into the nuts and bolts of some of the things maybe we would like to. But again, we'll try and give you a good overview, I suppose, of what's actually happening in the operation of RCT and everything. So the main sort of content that we have for you, as Laura just outlined there, just a quick overview of, I suppose, who's a principal, understanding the concept of a relevant contract, which I suppose really gives us the concept of a subcontractor. Look, obviously, where most people struggle with RCT is probably when we look at the construction operations. So we'll probably try and maybe devote a little bit of time to that. But again, just given the time frame we have, just a quick overview, I suppose, as well. Understand the requirements, I suppose, for submitting data or information to revenue. So in terms of submitting contract notifications and payment notifications, look at the requirement then to self-account for the VAT in construction. And just to highlight a couple of pitfalls and the penalties that most commonly come up, I suppose, from the operation of RCT. So that's an outline of our agenda. And look, I suppose, given the time, we'll try and get straight into it here for you as well. So look, RCT, you're probably fairly familiar. I'm sure most of you are either working maybe finance, accounts, that type of area. You might be familiar with the fact that, look, we have RCT applying in the construction sector. And RCT itself, look, it's a form of tax deducted at source when a payment is being made. And the only sector that we're sort of concerned about here today will be the construction sector. The other two sectors that apply in is forestry and meat processing, but I'm not concerned about those for the purpose of today. Just to highlight in terms of the rates or the possible rates of RCT that can apply, the rates themselves are either 0%, 20% or 35%, but ultimately in your capacity as a principal contractor, we have to accept the rate that has been determined by revenue as being applicable to that particular payment that we make. So the rates are really outside the control of the principal contractor. So when we sort of look at the key sort of concepts and where RCT applies when you have a principal who engages a contractor or a subcontractor, as we'd probably more commonly refer to them. And I suppose the concept of a subcontractor will arise under the idea of a relevant contract, And under the relevant contract, we will be looking then, I suppose, at the key one in the middle. Relevant operations is the key one that we'll be looking at. So those are the key concepts. And I suppose the crucial point I'd always say to people is, for RCT to apply, those three crucial concepts have to be satisfied for RCT to apply. If any one of them is missing, then that particular contract itself doesn't meet the requirement to be liable to RCT. Now, a very simple example would be to say, if a non-principal, say me as an individual, was to engage somebody to do work on my home, would I be required to operate RCT? No, I wouldn't. Why? Because I'm not a principal contractor. Whereas on the other hand, if I said to yourselves, if you're all construction companies and you engage people to do work for your business, chances are all of those three conditions might be met, RCT would apply. Now, generally, I suppose for the likes of construction businesses or companies, generally the key question will be the one in the middle, i.e., is the work that we're paying for, is it considered to be a relevant operation or a relevant construction operation? So all three must be met for RCT to apply or to have any chance of applying to the payments or the contract. So just to give you a quick overview in terms of a principal contractor and who a principal contractor is or what the definition is. Look, in the legislation, you have a couple of different categories of who can fall into the remit of being a principal. The first category talks about someone or some business who is a subcontractor under another relevant contract. So the key sort of example there would be that you could have a business pretty much operating as a subcontractor, but maybe if things got busy or maybe if they just weren't capable of taking on a particular job, they might decide to subcontract that work out to some other people in the business that they know or some other businesses in general. And I suppose they need to be aware that in doing that, if you subcontract out construction operations, that effectively then elevates that business into the capacity of being a principal contractor in addition to being a subcontractor. So hence you will have many businesses out there that will be operating in that dual capacity, that they are both a principal and a subby. I always tend to use the analogy of a ladder when I talk about RCT and talking about principals and subcontractors. And I use the sort of idea of looking up to your principals and sort of looking down to your subcontractors. And when you look at RCT and the operation of RCT, if I go back to that ladder, I really need to look one step up or one step down. That's really what I'm looking at. So if I'm, looking at any particular business, I'll be saying, okay, is there one step up? Is there one step down? We'll see then the sort of capacity in which they're operating in. So that's the first point, that subbies can promote themselves to be principals when they subcontract out work. The second category, and I suppose the main one that I'm just going to look here, is probably category B1. Any person who carries on a business that includes the erection of buildings, development of land, or the manufacture, treatment, or extraction of materials for use in construction operations. So again, maybe for a lot of yourselves on the call today, that may be the category that may be bringing yourselves in if you're involved in construction businesses, constructing buildings, developing land, etc. That might be the big one that might catch a lot of you. Now, as I say, the reality is the first category as well, the subcontractor one, can catch a lot of people. And just to be aware of that latter part in the category B1 here, that some businesses may not even realize that they might get caught. And those are the businesses that are involved in the manufacture, treatment, or extraction of materials for use in construction operations. Now, the reality is, if you looked at revenue guidance might talk about things like, are you a supplier of concrete? Are you doing tarmacking? Are you a quarry or sand pits or, things like that? But just to be aware, that can actually go much further. If you think about all the other sort of materials that are required when it comes to construction operations, who's manufacturing those materials? those types of businesses can also get dragged into the mix as being a principal contractor there as well. So that's just the main one I'm going to focus on there on B1. I'm not worried about B2 or B3. Look, just to be aware as well that there's a connected person rule. And potentially, now again, I suppose this is for individuals or businesses, obviously have to look at everything for themselves. But potentially, a person that might be connected with a company carrying on a construction operation, that individual themselves could potentially be brought within the mix of being a principal contractor as well. Now, there are certain exclusions that we probably won't have time to go through today, but I'd probably just flag it there to keep it on the radar that, say, for example, owners of construction companies could potentially be a principal in their own right, in addition to the construction company itself being a principal. So just to flag it now, there are certain exceptions and exclusions, but just to sort of flag that as a sort of thing to be aware of. Look, I suppose the other categories, things like local authorities, housing, approved housing bodies, some of those bodies that be operating on a charitable basis would still be an approved housing body. They would all be regarded as principals. All the various government departments are principals. And I suppose another wide-ranging one in the public sector is category F here, where it talks about any board or body established by or under statute or under royal charter and funded by the government. So essentially, that's nearly any public body out there that would be caught under that. Even down as far as when you think about things like schools and the boards and managements of schools, because you have a board established under statute, under the Education Act, that effectively brings them into the remix for RCT as well. And say all the Royal Charter organisations, that would tend to be all the organisations that might have Royal in their name. So, for example, you might be talking about the likes of the Royal College of Surgeons or the Royal Dublin Society or whatever it is. That's what sort of applies there. Category G, again, sort of a wide-ranging sort of category here as well. Looks at any organisation or business that is carrying on gas, water, electricity, hydraulic power, dock, canal, or railway undertaking. So again, if you looked around at the range of businesses or organisations involved in that, you'd be looking at things like Bord Gas, your Irish Water, your ESB, wind farms, CIE, etc. They would all be falling into that category. And then I suppose the final category here, category H, talks about a person who carries out the installation, alteration, or repair in or on any building or structure of systems of telecommunication. So again, what you're looking at there would be the likes of installers, people installing phone systems, broadband systems, Wi-Fi, that type of thing. They're all going to fall in there under that category and be regarded as a principal contractor as well. So that is a sort of broad general overview of who falls into the remix of being a principal. So that was one of the key categories that we were trying to understand. The second category, and I suppose I'm really bringing them in here to get the short ones out of the way first and then leave construction operations as it will take a bit longer. But the second category here talks about this idea, is there a relevant contract in place between the principal and the subcontractor? And when I look at the legislation and say, well, okay, what does the legislation tell me about a relevant contract? It effectively says, is there a contract whereby you have a subcontractor who is liable to a principal contractor to do any of the following? And in a nutshell, that pretty much the sort of 3 points sort of mean, are they actually going to carry out relevant operations for you? I.e., are they going to be physically doing them? If they're not physically doing them themselves, are they going to be answerable for that work being done by someone else, i.e. where you subcontracted onto another party? And I suppose the last one is nearly a bit of a catch-all as well. Are they going to furnish their own labour or the labour of others for the purposes of carrying out such operations? So, for example, that can drag in maybe the likes of people who might be providing labour into the construction market. that you might be saying, okay, look, we're supplying carpenters and electricians and plasters and plumbers, etc., into the construction sector. And if we're engaging that supply, then those businesses are supplying the labour of others for the purposes of carrying out relevant operations. RCT would apply there as well. So the key concept, I suppose, when we think about a relevant contract, there has to be a supply of labour in order to have a relevant contract. But also just to bear in mind that not only might there be a supply of labour, that might also involve the supply of the goods required to complete that job. So, for example, if you engaged an electrician to wire a building for you, you're probably going to expect him to bring the cables and the fuse boards and the switches and the fuses and all the other bits and pieces that he needs to actually carry out that wiring installation. He's going to bring all those materials with him to do the job. Really what you're looking at there is, okay, we engage someone to wire this building. We would probably see that as an RCT contract. So it has to be labour, but in a lot of times they may supply the materials that are necessary to actually do the work. But I suppose that's just a highlight, that's your general points. Just to be aware, look, I probably nearly mentioned this even as part of my intro piece, that in terms of an exclusion, there is an exclusion, I suppose in simple terms, to keep people out that revenue never wanted in the first place. And this would make sense when you even think about private individuals or indeed any other type of business that's not involved in construction operations. That the legislation will not regard someone as being a principal if they only construct a building or develop land and they do that for either their own use or their own business use, or indeed there's also another part in there about letting, if they're going to develop that for letting on a short-term lease, typically, which is anything up to 35 years. If that business itself or that person itself is not otherwise a principal contractor, well, then that exclusion serves to keep that person out. So I suppose in a nutshell, you could think about that from the point of view of somebody building their own house. I build my own house. Why would you want me in as a principal contractor? I just built my own house to live in. I didn't build it because I'm in the business of erecting buildings. It was purely just for my own use. Similarly, if you had a small retailer or any sort of retailer for that matter, and if you said to me, look, okay, they built a new retail outlet or a new retail store or whatever, you'd be saying to me, okay, well, they obviously pay a construction company to build that for them. Again, you'd be looking and saying, were they a principal? Well, again, obviously in all cases, you need to examine the hard facts in each case. But sort of at face value, you'd be thinking, they don't appear to be a principal. They're a retailer. They're just getting their shop built because they want to operate it and sell things in their shop. So that would appear to be for their own business use. They wouldn't be a principal. Now, I suppose it's like everything. If there's doubt, and one of the ones I probably would actually say as well is, in terms of that idea of the short-term lease, especially around that one, I would really be advising businesses, if that's the one that you're relying on to keep you outside the scope of being a principal contractor, I would probably just be advising businesses that, look, that might be one you want to just double check with revenue just to make sure that you're satisfied that you meet the conditions for that, or that basically revenue, I suppose, agree with your view on it. Because I suppose the key point is the penalties can be quite severe if we don't get it correct. Just looking at the quick territorial scope of RCT. Look, the territorial scope is pretty much I'm going to say the Republic of Ireland. And it's any works that get carried out in the state, either wholly or partly in the state. And it can include our territorial waters and certain areas of the continental shelf as well. So key point is it works being done in the state, wholly or partly in the state? That's the sort of key point. Whether the subcontractor or indeed the principal for that matter, whether they are resident or non-resident is immaterial. All we're really concerned about is where is the location of the works? Now, one of the ones I would also say as well is in terms of works that might be partly in the state and partly outside of the state, it can be, or probably would be recommended, not that it can be, I would be recommending that you would be going to revenue and seeking a ruling from revenue in terms of what portion of a contract might be subject to RCT. So for example, if there was works maybe that were overlapping, say you had a contract and it was crossing the border between the Republic of Ireland and Northern Ireland, you might be telling me that a portion of that is liable to RCT, and maybe there might be another portion that was carried out in the north liable to under the CIS scheme in the north. So that's where you'd need to be going to revenue really to try and get a ruling as to see, look, what value of that contract should be liable to RCT and the value that would be liable to the CIS scheme in the north. So key point, residency is immaterial. Where is the location of the work? Where is it taking place? That's the important part. So getting on to the sort of big one, when it talks here about construction operations. Construction operations, again, look, this is going to be a quick sort of overview on it. There are various different categories. And the first one here talks about the construction, the alteration, repair, extension, demolition or dismantling of buildings or structures. So buildings, probably fairly straightforward, can be a house, a hotel, a shop, whatever it might be. You know, the next one then, structure. I suppose what you're sort of thinking about is this some sort of fixed installation that's sort of forming part of the land? Is, generally how I tend to regard something like a fixture, because there is no precise definition of it. You know, if you looked at revenue guidance, revenue talk about things like gates and traffic lights and parking meters and post boxes and signs and whatnot. So there is no precise definition of that. And you're just sort of thinking to yourself, is this sort of fixed in the ground or attached to the ground with a reasonable degree of permanence attached to it? If so, broadly speaking, it'll probably meet the definition of a structure. And when you sort of look at then what we're doing to it, so if you're constructing it or erecting it, or, if you take something like a prefab, you might be say you're installing it, might be the word you might use for something like a prefab, but the putting it in place, the changes to it, any repairs to it, any extension or demolition or dismantling of it, that will all be liable to RCT. Now, a couple of points that revenue have said when it comes to things like alterations. Revenue have used the phrase that, look, there should be maybe an element of materiality to that to bring it within the scope of RCT. That's one where I would be a little bit cautious on, because your definition of materiality might be different to my definition of materiality. And I would nearly be inclined to say to you, look, from a safety point of view, if you consider the works to be an alteration to the building or structure, would it be safer just to operate RCT there? Just be mindful of the repair and the maintenance side of things. So obviously repair is called out in the definition as being liable to RCT. When it comes to maintenance, if it's a maintenance only contract, maintenance only is outside the scope of RCT. However, if it was a combined contract for maintenance and repair, and I suppose a line that revenue would have used is this idea for revenue to use the line for single consideration. I probably put in there single price. If it's a combined contract with a single price, you'd probably suggest that that contract should be liable to RCT. Whereas if there was a separate charge for the repair, revenue have tended to say, well, look, it's only the repair contract that would be liable to RCT. So a very quick example, if somebody came to service your gas boiler, you might be thinking, okay, that's maintenance. By the way, when I'm there servicing your boiler, I notice that the fan's not working. I need to install a new fan in it. So now I'm effectively carrying out a repair as well. And by the way, when this work is finished, I'm probably going to hand you one invoice and say, there you go, there's the invoice for the work that I've just done. That would sound very much like a single price for a repair and maintenance works that was carried out in the gas boiler. Whereas a different example would be, you might tell me, look, we have a maintenance contract on our fire alarms. We pay X amount per year. They come along, they carry out periodic inspections, sign off our fire register, etc. And then you might come along and say, oh, by the way, something happened one day. They came out, they told us that a sensor or something wrong with the fire alarm wasn't working. And while they were there, they had to replace it. And they said, okay, the bad news is, look, we're going to have to charge you extra for that because that's obviously not covered as part of your maintenance contract. That now sounds like you've two separate contracts, that you've got one for maintenance, which was outside the scope of RCT, and then for the repair that was carried out, that is within the scope of RCT. So again, just to be, I say, it is a quick sort of overview of some of these points here. Look, when we come to category B, I suppose you've got all the same sort of things: construction, alteration, repair, extension, or demolition. And the key words here would be, if you consider this to be works forming or to form part of the land. And the legislation does go on to give you examples of what's included, but you should always be thinking, is this works forming or to form part of the land? So yes, it could include walls, roadworks, power lines, telecommunication apparatus, all the rest of runways, docks, harbours. Look, I'm not going to read through it all there. It is in the slide. But, think about the likes of things like pylons and telegraph poles and masts and underground cabling and underground pipelines and all that type of stuff. That's all going to kick in there as well. Even like all the sort of things like development of sites and all that sort of stuff is all going to kick in to that. So that would be our category B. Category C, and I suppose the key word here is sort of bolded it as well: the installation, alteration, or repair in any building or structure of systems. Systems of heating, lighting, air conditioning, soundproofing, ventilation, power supply, drainage, sanitation, water supply, burglar, or fire protection. So again, we're looking at systems here. Systems of heating and air conditioning, things like HVAC, installations of those systems or repairs to them. Think about fire alarm systems. Think about water systems, water coming into the building, wastewater going out of the building. Think about burglar protection systems, things like fire alarms, things like cameras, things like access control doors. All those types of things, all typically falling into this particular category. Category CA talks, I suppose, about maybe telecommunications, but again, it talks about systems of telecommunication. So again, what you're thinking about here is works in or on the building. You're thinking about the wiring that might go from the data point in the wall back to your comms room or whatever it is. That's what we're looking at here when we're thinking about RCT. We're not thinking about the fact that I come along afterwards and plug in my phone or I plug in this screen or whatever it is. The screen is effectively what revenue might regard as your add-on. It's the wiring that's in the building that's really what's being looked at here in terms of the RCT activity. So that's broadly things like broadband as well. There is, I suppose, various bits of wiring and routers and whatnot that goes on to ensure that you have broadband or Wi-Fi in the workplace. Cleaning, in a nutshell, all I'm going to say to you about cleaning is, generally speaking, the cleaning of buildings and structures is outside the scope of RCT. Generally speaking, it would be considered to be maintenance outside the scope of RCT. The only time that cleaning would be liable to RCT is where it takes place as a result of a construction operation. So, for example, if you constructed a new building and you said, okay, look, before we actually sell this or let people occupy it or whatever it might be, it's going to have to undergo a deep clean. Well, then something like that would be liable to RCT. Why? Because that cleaning took place as a result of the construction of the building or any refurbishment or renovation works or whatever it might be. That cleaning was a result of that works taking place. So hence liable to RCT in that instance. But generally speaking, cleaning is not liable to RCT. Category E is a wide open category. Category E talks about operations that are either an integral part of, are preparatory to, or are for rendering complete any of the above operations that we've described in paragraphs A to D. So that should always be your sort of crucial thinking point. Is it an integral part of? Is it preparatory to? Or is it for rendering complete any of the other activities? And again, I always tell people, stop there and think about that. That's your sort of key thinking point. Because while the legislation does go on to give examples, you should still always be going back to think, is it integral? Is it preparatory to? Or does it render complete? Yes, the legislation goes on to talk about things like site clearance, earth moving, tunneling, boring, scaffolding, landscaping, etc. Things like site clearance is obviously preparatory to. Things like scaffolding are obviously an integral part of the construction works taking place. And if you said something like landscaping, you'd be saying, okay, that renders the site complete. So, you're looking at each sort of category and saying, well, okay, would it fall into any of those? Always bear in mind as well, when it comes to the likes of machinery, if you're using machinery, if that machine or whatever it is comes with a driver or an operator, then you're effectively saying that's a service. Whereas if the machine came on its own, it's a good. So if we hired a cherry picker to help us do construction works, if the cherry picker just gets dropped off at your front door and it's up to you to use it yourself, that's a good in its own. The hire of that cherry picker, no RCT, because it was just the hire of a good. Whereas on the other hand, if you hired a JCB, the chances are the JCB will come with a driver. And if you're now hiring a JCB with a driver, that's a service. I'm assuming you're using the JCB for construction works, site clearance, whatever it is. Then you're looking at RCT applying there. And under the heading of rendering complete as well, you're looking at all the things to try and render the building complete, the plastering, the painting, the tiling, etc. would all fall in under that as well. There probably doesn't be too much that falls into category F, but I'll just very quickly touch on it. Category F is more looking at, I suppose, businesses or works that are an integral part of or preparatory to or for rendering complete. The drilling for or extraction of minerals, oil or natural gas, or for the exploration for or exploitation of natural resources. So for example, maybe if you were involved in the likes of the Shell to Sea project or something like that, trying to think of something off the top of my head for that category. But something like that, you might be thinking, okay, that could fall into RCT under this particular heading. And the final one that I'm going to touch on is the haulage for hire of materials, machinery or plant for use, whether used or not, in any of the construction operations above. So again, the key concept here is to think about, are we paying somebody, a business, to transport construction materials or plant or machinery for us? If so, then RCT would apply there. So really what you're looking at is what's being transported. And that's really the key question that you're asking yourself. What is being transported? If it's suitable for construction operations, then the likelihood is it's going to be falling into that transport will fall into RCT. The key one I'd always tell people there is you don't include what we call supply and delivery of goods. So for example, if I rang up concrete business and said, look, we need 20 lorry load of concrete to put in a foundation. Can you deliver it down to the site? What are you getting there? We're getting 20 lorry load of concrete. That's what we're paying for. Yes, it's going to be delivered down to the site. That's great. That's where we need it. But I just bought the concrete. No RCT. Whereas if you looked at the concrete company and said to yourself, who's driving the lorry or who actually owns the lorry that is being used to deliver the concrete, the chances are a lot of those lorries and lorry drivers might be subcontracted in. So the concrete companies might have a lot of issues there in terms of operating RCT on the lorry drivers that they engage in to actually deliver the concrete to you. So just be mindful, I suppose, and just be aware of the difference, I suppose, between supply and delivery versus the independent contracting of haulage services. Folks, I'm going to stop there. I'm going to jump pretty quickly onto the next category, which was, I suppose, our communication with revenue. The first sort of phase of that communication with revenue when it comes to RCT is our obligation to notify revenue that we have a contract in place that is liable to RCT. And I suppose the terminology we use there is that we do a contract notification. And in that contract notification, which we submit online to revenue through Ross, we inform revenue of the details of the contract itself. As part of that process, you're basically declaring to revenue that this is not a contract of employment. You're entering in all the subcontractor details and details of the contract itself. If that subcontractor doesn't have an Irish tax registration number, TRN, they will typically default to 35%. You're entering in details about the contract, start, finish, value, etc. There's an obligation to put in site details as well to create a site number for it. We submit that to revenue through Ross. Ross gives it back an acknowledgement. And we get an ID number assigned to that. We get an indicative rate of RCT that's going to apply there. But I suppose the key point I always say about the indicative rate of RCT is, look, just to be aware that that rate can change when it comes to the time that you go to make the payment. The rate may be different. So it could be 35% today. Maybe in a month's time, it could be down at 20% or whatever. Generally, the rule is that for each individual contract you enter into with a subcontractor, the general rule is that each one of those requires a separate contract notification on its own. There would be an exception there for what we call ongoing contracts. If you revenue now has specified terms and conditions as to what constitutes an ongoing contract and what doesn't, but if you satisfy those conditions, one contract might suffice there. It's just basically reducing your admin work a little bit of having to submit multiple contract notifications. So there is T's and C's around it, but ongoing contracts, one contract notification would suffice. I suppose then that's your contract setup. So obviously you'd be expecting then the subcontractor goes and does his work. Subcontractor then starts submitting invoices, looking to get paid. And I suppose as part of that payment process, one of the first things we have to do is notify revenue of our intention to make a payment. So I suppose at that crucial point, the fact that we're intending to pay, we have to do advance notification to revenue. Now, when you look at the legislation, I think the wording in the legislation is this idea that immediately prior to making payment, there should be a payment notification. Generally, I'd be saying to people, look, maybe the day or two before you're about to make payment, that payment notification would be submitted to revenue. And when you submit a payment notification to revenue, revenue will then send you back your deduction authorization. So for example, if I said, look, I want to pay, so I'm a principal, I want to pay my subcontractor €20,000. I will do my payment notification to revenue. Subcontractor A, or whatever his name is, value is going to be €20,000. I'm submitting that now. Revenue will come back to me saying, happy days, thanks for that. By the way, here's your deduction authorization. The authorization will then indicate the rate of RCT that you need to be deducting from that particular payment that you're going to make. So I suppose the crucial point being that that has to be done prior to the payment being made to the subcontractor. In terms of the values that you input on that payment notification, I suppose I'm going to say it's the invoiced value is what I'm generally going to say here. I'm going to use maybe the phrase the gross value, but that's where you're looking at, if we said, is that VAT inclusive or exclusive? Well, I suppose it depends on the particular activity itself. That if we say the activity falls within the scope of reverse charge VAT, well then in that instance, I'm not including any VAT in the amount that I input on my payment notification. That would be the large majority of construction services. The exception there was obviously haulage is an exception to the rule. And I suppose then when it comes to something like haulage, if I was registering a payment notification for a haulage payment, because that would be correctly chargeable on the invoice there in the first place, I would be including my VAT amount in the amount that I'm inputting on the payment notification. So that's your sort of general run-of-the-mill payment notification that has to be submitted in advance of making payments to your subcontractors. That in turn results in a deduction authorization coming back from revenue. It authorizes the rate of RCT that you need to deduct. And I suppose just to be aware of a crucial little point here, that if that authorization states that the rate of RCT is either 20% or 35%, there is a requirement on you, the principal, to give the subcontractor either a copy of that actual deduction authorization itself or some other document that contains the same information, i.e., if your remittance advices contain the information that I've outlined there in the bottom of the screen or the slide, which is the same as the information on the deduction authorization itself. If your remittance advice contains that detail, your remittance advice will act as a substitute for the actual authorization itself. So for a lot of businesses, the remittance advice generally works. But if you find that the remittance advice doesn't contain all that detail, strictly speaking, you are meant to give the subcontractor a copy of the actual deduction authorization in the event that you've deducted either 20% or 35% RCT from them. If it was 0% RCT, look, there's no requirement to give them a copy of that authorization. So that's the authorization. It's a fairly instant sort of feedback, I suppose, that comes back from revenue. I suppose then when we go through the calendar month, I'm assuming most people are monthly filers. You can have some that are quarterly filing, but on a general sort of monthly cycle, you might be doing various pay runs each week of the month. You get to the end of the month, revenue sends you out a summary. Here's a summary of all the payments that you've notified us of during the calendar month. Are you happy with it? If you're happy with it, basically file it. There is options to make changes to it if you want to make changes to it. But in a nutshell, if you're happy with it, file it. That summary then, in effect, becomes your RCT return. I'm assuming most people these days are probably paying and filing online. If so, the deadline is the 23rd of the following month. If it's not paid and filed online, you're back to the 14th. Just a quick mention on VAT and the crossover, I suppose, into construction operations. So under the legislation, reverse charge VAT kicks in respect of construction operations that are subject to RCT, with the exception of haulage for hire. So hauliers in Ireland will still be charging VAT, even though you might be still applying RCT. So as I said in the last couple of slides there, hauliers invoice, VAT inclusive, we apply RCT to the VAT inclusive figure. An invoice for construction works, there'd be no charge of VAT on it. We would self-account, and what that builder should put on his invoice instead would be sort of a note along the lines to say that VAT on this supply should be accounted for by the principal contractor. A couple of key points in terms of subcontractors who are based in Ireland. Yes, they should still generally be registered for VAT if they're exceeding the turnover threshold, currently 42,500. And so normally you'd be expecting that most businesses probably would be VAT registered. You'd be expecting their turnover to be over that. Just be aware, if it's a foreign subcontractor and they're not established here in Ireland, just be aware there's a nil threshold that applies to a foreign subcontractor. Now, ultimately, be saying that pretty much means from your perspective as a principal, we should be self-accounting in all construction operations from foreign subcontractors. And to be fair as well, in reality, probably in respect of all Irish subcontractors, we probably should also be self-accounting, because it would be the exception that you'd probably tell me that an Irish subcontractor wasn't registered for VAT here because they were under the threshold. So most times you're going to be self-accounting. When we talk about self-accounting for VAT, if we're completing VAT returns, we're looking at box T1 on the VAT return. And look, if you're carrying out a taxable business and you're entitled to your input credit, you take a corresponding amount in the input credit in box T2. Look, in terms of VAT rates, just most stuff that you're doing in construction is going to be 13.5%. Look, just to highlight maybe some notable exceptions, things like scaffolding, the temporary fencing, supply of a crane with an operator, or the hire of labour through an agency. Just be aware those types of things fall into 23%. The likes of low emission heat pumps, and I suppose if we now look at the new provision that came in there for the qualifying apartments, and the qualifying apartments was from November, 26th of November 25 up to the end of December 2030. They drop into 9%. And then in terms of solar panels on private dwellings or schools, they fall into 0%. So again, those are the main sort of exceptions from the 13.5. Look, in terms of our RCT penalties, and a couple of them, just we'll finish up on the pitfalls in the next slide. If you were to say, look, what's the biggest issue or nearly the worst thing that can happen when revenue come to do an audit from an RCT perspective, it's really this idea that, look, we didn't operate RCT. So it's one of the I'll always say to people when we talk about RCT, I'll always tell people, look, if you're in doubt and you're unsure as to whether RCT applies or not, and you're the principal contractor, it would be safer for you to apply RCT. Why? I suppose the penalties that apply for getting it wrong. If you said to me, look, I made a payment, I didn't operate RCT, I didn't do a payment notification to revenue now come out and do a compliance intervention, and they're going to hold me liable to a penalty. What value of that penalty could arise? Well, the penalty is really determined by the rating of the subcontractor. So you'll see there on the slide that if your subcontractor was tax compliant and had a 0% RCT rating, that's probably the best position you could hope for, that your penalty would be 3%. And for example, if you were talking about a 100 grand payment, you'd be talking about a penalty there of €3,000. Now, as you go down through that table, and subcontractor maybe is 20% rated or down to 35% rated, or indeed, what if your subcontractor wasn't even registered with revenue? You could be facing a penalty of 35% there if your subcontractor wasn't registered with revenue. So on a 100 grand payment that you made to that subcontractor, you could now be faced with having to give revenue a €35,000 penalty on top of that as well. So that's really the big one. If there's uncertainty, safer option is to go down the RCT route. Look, there's a couple of other little ones. Those are the big ones on that table. There's a couple of other little ones I'm not as concerned about. Things like amending returns, there's a €100 surcharge. And yes, if you went through the RCT legislation, yes, there are a number of offences that could attract a €3,000 fixed penalty. But the big one is really this idea of not operating RCT, or I suppose to be more specific about it, not submitting a payment notification to revenue in advance of making the payment. That really is the big one to be mindful of. That's where you would see most penalties arising in practice. And to wrap it up with a couple of just things to be aware of, or key takeaways, I suppose, where do we see things going wrong when it comes to RCT? This idea of an oblivious principal, i.e., I didn't think I was the principal contractor, I didn't bother operating RCT, and lo and behold, revenue obviously come out and take a different view. The idea that the services themselves, you think, okay, this is not liable to RCT, I don't believe it was construction service, and that's where I'd always say, if in doubt, RCT is always the safer option. Failing to submit the payment notifications, which we just sort of saw there in the last slide, that's really where the big sort of penalties kick in. Look, in terms of the VAT, failing to self-account for the VAT as required. Some people might look at it and say, sure, it affects box T1 and it affects box T2. It's a plus and a minus. Sure, I'll just leave it out altogether. Well, that's actually, you're not reporting the correct transactions if that's the case. And so you need to be reporting T1 and T2 as applicable. And then one of the final ones, just sort of this idea, I said to wrap it up, we just say, look, just the key difference maybe around repairs and maintenance contracts, where obviously your repairs are liable and maintenance only contracts would not be liable. But if it's a contract involving both, then it would all fall into RCT if it has a single consideration attached to it. Folks, that pretty much brings me to the end of the presentation, and I think I might be handing back to Laura to see in terms of what questions we might have.
Hi, Kieran. Yeah, that was great. Thank you. That was real clear and practical session. Now we do have over 30 questions in from the chat and the Q&A function. So I'm just gonna, well, I think you might have touched on some of them and already answered them, but we're just gonna fly through them and get through as much as we can, if that's okay. In the Q&A, I'll start in the Q&A function. So
Yeah.
what are the RCT rules relating to UK hauliers delivering to construction sites in Republic of Ireland?
Again, if it was a UK haulier, it probably would actually kick back into reverse charge VAT. So I'm assuming firstly that we're talking about independent haulage as opposed to supply and deliver. But if it's independent haulage by a UK haulier under VAT reverse charge rules for services provided from abroad, that actually will kick back into reverse charge in that scenario. So an Irish haulier will charge a VAT. A UK haulier would be self-accounting.
Okay. Another haulage question. So what about haulage companies hauling materials for construction companies?
I suppose I'm going to say RCTable. I suppose if it's independent haulage contracts, I'm going to say RCTable and the VAT that we just outlined there in the last question.
Okay. Is the construction of a company office or company warehouse a relevant contract?
I suppose if the organization is a principal. So if you're a principal, go back to the key concepts. Are you a principal? Do we have a subcontractor? And are they carrying out construction operations? So the first point I would say in general is that yes, the construction of a warehouse would be sort of considered a construction operation. Is that then being carried out in respect of a principal contractor? So if it was, it seems to fulfill the criteria for RCT. Whereas if you were building that warehouse for a retailer who might not be a principal contractor, that would appear to be outside the scope of RCT. So you're looking at the key definitions to see are you satisfying the key definitions.
Okay. And if a subcontractor invoices cost plus VAT, does this negate the need to declare the invoice for RCT?
No, because generally in a lot of what you should be looking at, as I often say, is nearly the big picture. If you take somebody who is going to build you a new building, yes, they're going to factor in the cost of the bricks, the sand, the cement, the windows, the roof, whatever it might be. But if they're charging you €500,000 or €1 million to construct a new building, you'd be just looking and saying, okay, what are we paying for? It's the construction of a new building. We're a principal. I would be looking at that and saying RCT. Does it matter that they're charging me? Like obviously they're going to factor in the cost for the bricks and the sand and everything. From my point of view, I probably don't necessarily need to see that. But from their point of view, they might be just trying to outline, I suppose, the costs that they're incurring. But I would generally be looking at that and saying, typically that would all be RCTable. Okay. One of the main things revenue have tended to exclude is the likes of white goods. So like when it comes to your fridges and freezers and washing machines and that type of stuff, revenue would say something like a fitted kitchen would be RCTable. But revenue have always tended to exclude the likes of the white goods and that.
Okay. I work with housing maintenance and public contracts, i.e. county councils. Are all services I carry out for the county council deemed RCT? Therefore, county council is principal contractor. We are supplying labour 100% of the time and materials 95% of the time. For the 5% is emptying septic tanks or reviewing an electrical fault, no materials used. Is county council still principal contractor or should I be charging VAT on this?
I suppose, well, firstly, I'm going to say that a county council is a principal. So that's where I'm going to start from. I suppose then what I look at is for yourselves in terms of the services that you're providing, you're nearly looking at then see each individual contract that you would have with that county council. So for example, if you said we're supplying a lot of labour and supplying a lot of construction services, if that's all sort of, what you might refer to as your RCT contracts, well then yes, the council should be self-accounting for the VAT there and operating RCT on it. Whereas if you said, for example, maybe I think you mentioned there, maybe was it clearing septic tanks or something like that?
5% of the time,
Yeah,
as an example, emptying septic
yeah,
tanks or reviewing an electrical fault, no
yeah.
materials used.
I suppose if I looked at something like emptying a septic tank on its own, if I took that as a standalone service, I would generally say no, it's not liable to RCT in a standalone capacity. But if you're telling me that that is built into an overall big contract and that's just one minor aspect of it, I would probably be nearly looking at it and saying, look, I think that would all be falling in the scope of RCT, or certainly
Mhm.
at least I might be saying to you, if not, you might want to go to revenue and maybe seek a ruling. But individually, I'd be looking at it contract by contract basis. But in situations where there's stuff mixed together, look, it's not an area I wanted to go to, I suppose, on today's contract on today's webinar, because I know revenue have released some guidelines recently around mixed contracts, and there is a little bit of confusion around it. I would probably tell people there in that instance, if you're feeling confused around that area of mixed contracts, it would do no harm to go to revenue and get a revenue ruling on what you're doing.
Okay. Should ESB invoice for house connections be a vatable or RCT invoice? Same with the other utility providers.
If I understand it, if it's just the connection fee, that would be outside the scope of RCT. I'm not sure if that's payable. I think that's, I'm not sure in the exact detail, but I know certainly for ESB networks, I don't know if it's always payable to them or payable to other providers. But if it's just what we might call as your connection fee, that's typically outside the scope of RCT. I thought that might have been always payable to ESB networks. I'm just not 100% sure if there are instances where it could be payable to other providers.
Okay. You've answered above question, but if they charge us VAT, is the VAT inclusive amount to be included in the RCT declaration?
As in what question
Oh,
is that relating to?
sorry. I'm not sure which one, so I might just move on actually
I
if
suppose
contact.
the short answer I would give, if VAT is correctly payable, i.e. haulage, if VAT is correctly payable, we include the VAT inclusive figure in our payment notification. On the other hand, if you tell me that VAT was not correctly chargeable by the subcontractor, number one, I'd be probably telling you that the subcontractor has got their invoice wrong. Do we need to go back and ask them to send in a replacement invoice and put that note on it to say that VAT should be accounted for by the principal? And in that instance, we would obviously then be putting in just the invoice total, which would be VAT exclusive.
Okay. Can you advise what happens in this scenario? We are being merged with another entity and our VAT number will change. What happens to the existing ongoing contracts? Will we have to recreate SIN with revenue when we pay our subcontractors, even if the invoice was issued to the old entity? Also, we are subcontracting work for other companies. We'll be invoicing at subcontract VAT 0% under the current VAT number, but by the time the customer pays us, we'll have our new VAT number. I am unsure what the consequences of this will be. Long question.
I'll be honest with you, and I'm probably going to agree with you. I'm probably going to be unsure as well. I'm going to say to that one, look, I'd recommend you actually just contact revenue on that particular one. It's a very precise sort of scenario. I don't want to commit to anything here just in case I'd be giving you something wrong. I would probably recommend go straight to revenue and just see what revenue guidance would say on that for you.
Okay. Who is responsible for ensuring VAT is applied correctly on an invoice, whether reverse charge VAT or not, the sender or the recipient?
I suppose the answer, I speak out of both sides of my mouth here when I give you the answer to this one. If a principal asks me that question, I'm always going to say to the principal, look after number one. You basically, if you feel this is a construction service, you make sure that the subcontractor is sending you in the invoice with no VAT on it. I suppose by the same token, if I was speaking to the subcontractor and I said to the subcontractor, are you sure? Is this a construction service? And if they tell me they're not sure, I'm probably going to say to the subcontractor, you'd be best advised to charge them VAT. So I know it sounds like I'm giving a conflicting answer. I'm always sort of saying to each party, look, firstly, look after number one. And subby looks after number one by charging VAT. Principal obviously looks after number one by self-accounting. You know, the key point I'm really going to say is, look, the real that when we think about the penalties that can apply, they're much more severe on the principal. If a principal came back to the subby and said, look, we think this is RCTable, in a lot of cases, unless it was, if it was grey, I'm probably going to say to somebody, look, yeah, you should be fine. If you go down the RCT route, you should be fine. Now, if it was sort of black and white, you might be saying, no, that's not a construction service. The supplier was correct in charging VAT. So it really depends on the circumstances. But you're always trying to say to each party, look after number one, try and ensure you're getting your treatment right. But the bigger penalties do hit the principal if he gets it wrong. So I probably would err slightly towards the principal and say, look, your decision might be that carry a little bit more weight in the argument.
Okay. Well, look, I thank you so much. There's so many questions that we haven't answered. If anybody wants a copy of the slides, you can send it to myself, Dennison, LDENNISON @cif.ie. Kieran, this has been great. Myself and Kieran have spoken that we're going to organise a training course after this to probably go into more depth, and I can see that the need is there because we've so many unanswered questions there at the moment. But I think we're going to have to cut it off because we've just run out of time. Kieran, thanks again, and thank you everyone for attending.
And can I just say, Laura, thank you very much to asking us to do this. And can I just say, for those online, look, it is, as Laura said there, we do RCT training. Generally takes up the course of a full day by the time we get through everything and spend a bit of time discussing it. Today was just a very quick flavour, I suppose, of what we do. So thanks very much to everyone online, and thanks, Laura, for asking us to do the session today.
No problem. Take care, folks. Thanks a million.
Thank you. Thanks very much.
Bye.